Crypto markets rebound sharply after leverage gets flushed out and inflows return as the Bank of Japan backtracks on future rate hikes. Bitcoin chops around 60K as investors brace for a potential escalation in the Middle East, which triggers put buying. And Bitcoin dominance hits a 3-year high, but implied vol on ETH still trades at a hefty premium. All this and more in this week's Crypto Options Unplugged. Welcome back to Crypto Options Unplugged, everyone. I'm Imran from Options Insight. I've got my man Dave here from FRNT, and we've got a guest returning. He's been on the show before, James Van Straten from Cryptoslate. How you doing, man?
I'm very good, thank you. How you doing?
Welcome back to the show.
Cheers, thank you for having me.
No, it's good. It's good. I want to know what you're seeing in all your on-chain stuff that you look at, because I don't really look at that stuff that much. So, Dave, 1 week on from a pretty epic crash in markets.
Yeah.
What's the land looking like now?
Yeah, I mean, obviously it's not even been that long since we sort of last spoke, and we're in here. I think as we discussed last week, the market just got so carried away. When people talking about this 2008, 2020, when we weren't even 10% off record highs in the S&P, and this whole carry unwind thing. I think as we spoke about last week, for me, it is a carry unwind, but it's more of a levered momentum trade. And this $4 trillion worth of assets, of Japanese assets that are sat in foreign assets, isn't going to be being repatriated, anytime soon, because there's still a sufficient yield differential there to sort of keep it there. And also, those large assets are held by the big sort of pension funds and insurance funds. So I think everyone got far too carried away on the carry unwind. We're still talking about, how much further it's got to go. I think it's probably mostly done.
You agree with JP Morgan?
Yeah, but when people are pushing back against that, they're talking about this $4 trillion worth of assets sat there. If that repatriates, obviously it's
good
a
night,
shit show,
Vienna, right?
But it's not, and that's not what's unwinding. What's unwinding is this levered momentum trade that was long dollar yen,
spec money,
long Nikkei, long Nasdaq. It's all blown up. It looks to me like it's probably run its course.
Well, the vol market's certainly suggesting that, right?
Yeah.
Just broad cross-asset vols getting hammered.
Yeah.
Right.
I still feel obviously vols have corrected like quite quickly. VIX back below 20. I still think that VAR shock will probably keep sort of risk a little bit limited.
It is keeping skew elevated in S&P. So whilst vols mean reverting back fairly quick, skew's staying a bit more stubbornly bid.
Yeah, so I kind of feel like we've had this relief bounce. I don't think there's a huge amount of deleveraging to sort of go on. I think that was kind of done. And in fact, if you look, obviously I was away for a couple of weeks, but as dollar yen was breaking down, like Nikkei and Nasdaq was already trading heavy. So I actually think there was an unwind that was going on in a way. And then last Monday we had like the throw the towel in moment where everything got blown up. Obviously the other question is, so I think the deleveraging is largely done. The other question that always lingers after these events is, where are the dead bodies? Are we going to find out that someone out there is probably in trouble? And then all of a sudden that could spark another leg. But generally, I think fine. Like, I think we're done. I think as well, as we spoke about, it's actually setting up from a macro side of things really positively. Last week, just kind of calming things a bit. We had a better jobless claims number. We had ISM services. So it kind of just cooled these, like the US economy is just about to drop off a cliff.
Literally just seen CPI come in.
And to be a little bit sort of controversial in it, I guess, given the way the market's positions at the moment, and a bit contrarian. I still feel we're in a bit of a Goldilocks phase for markets where the US economy is clearly softening. My base case would be we go into like a mild recession. But we've got this slowing, softening economy, and I still think we're in a very much like disinflationary world, which generally I think is going to be sort of really good.
Green light for the Fed to cut, right?
Fed can cut.
Do you think we get 50 bips though? I doubt that. Right?
I think that feels a bit strong.
I think that would spook the markets a lot. 25 basis points to keep what the market is perceiving. I think it's 2 or 3 cuts for the rest of the year.
Yeah.
Just
Yeah,
to
like an
follow suit.
orderly
Yeah.
cutting cycle.
Yeah.
Yeah.
But my question, David, when we were just speaking before is, just say Japan's inflation stays really stubborn and they do have to hike maybe to a 1%, which I think one of the governors was saying that could be the neutral rate. Do you see that being a problem in the future or not?
I think it would be if we got there, but again, we saw last week straight away as soon as things started to break, you had the Bank of Japan coming out and basically saying we're well aware of this, and they're going to keep an eye on it. So again, it kind of highlights my view around all of this, that central banks, it's not just about the economy, right? Their actual probably number one job is to maintain financial market stability. So as soon as things start to break, they're going to be sort of stepping back on the rate hikes and all that. So
Bank of Japan already said that, right?
which is what they've already said. So
Yeah.
so that's my point. So the other thing,
So sorry, so you just see the yen essentially just continuing to blow out and going to...
yeah, like I actually think the where dollar yen goes will be more dependent on what the Fed do. So
What
look,
US yields do.
yeah, and I think there's a limit. There's definitely a limit to how far the Bank of Japan can hike, given that they got 260% debt to GDP.
So funny. It took them this long to hike at all, and now it's like they've seen the reaction in their market. It's like, okay, yeah, we won't try that again for a while.
Yeah. So I think there's a limit on how far they can go. They've already said that if the market blows up, we won't keep going.
Yeah.
Even with their sort of bond purchases that they've tapered, they always leave the caveat that they would stand ready to prevent any kind of sharp move in yields, i.e. they will do more QE if yields go to levels that they're not comfortable with. So you've still got that central bank put there. The other thing with Japan, I still think we're in a disinflationary world. Their actual economy is very, very soft. So I think eventually that'll correct. And before you know it, I think Japan's back in a disinflationary, low growth world. And they're going, shit, we should probably cut rates again.
With their declining birth rate, aging population.
Yeah, all the same things that are hitting sort of Western economies.
So James, last time you came on, it was just after the halving, and we had news about the Ethereum ETFs. Like they were going to happen. What are we seeing on the inflows side of stuff? Do you think it's a bit underwhelming? Do you think it's going to keep coming?
I think for the Ethereum price action, it's been extremely underwhelming, and it seemed like Solana's taken a lot of the price action for it. But I think going into the inflow specifically, Grayscale's ETH has seen, I can't remember, a couple of 100 million billion of outflows every single day. And today was the first day there's been no outflows. So that obviously takes the huge pressure off Ethereum.
Yeah, we had a decent bounce off those lows. How low did Ethereum get? Like 2100, something like that? Now it's at 26.
Yeah.
So yeah.
Yeah, and we're seeing again what we saw in IBIT with BlackRock's Ethereum ETF. They're seeing consistent inflows pretty much on a daily basis. So I think Ethereum's a quarter behind Bitcoin. Maybe Ethereum's even further on the risk curve than Bitcoin. So it may take those institutions even longer to adopt it, but maybe that's how they're positioning. So maybe we don't see these huge inflows for this first quarter of the launch, and then it comes at the second and third quarters.
So the Bitcoin dominance set to continue, in your opinion?
I would expect so. I think we're just over 57%. I think 60% is pretty certain, and it would correct from that 2021 low. And I think what's interesting with the 13F filings, we haven't really seen much this quarter, and we were speaking before the summer periods are quite quiet. Maybe that's why Bitcoin hasn't really gone above 60,000, even with this softening data.
September's quite a seasonally weak period, right?
Yeah. This is, I think, the 33rd week of the year, and historically, Ethereum was about 5% down on it, and Bitcoin was also down on it. It was actually one of the worst performing weeks of the year. Maybe because there's just no buys, everyone's on holiday, I don't know. But yeah, so we're hoping for this step. I'd be very comfortable staying around this 60,000 level going into Q4.
And do you think that part of the dominance of Bitcoin and why it may continue to go higher is because of the US election and the fact that it's become a bit of a political battleground between parties?
Yeah, I was in Nashville and it was incredible to see that Bitcoin has become such a political topic.
Were you at the conference?
Yeah, it was
You saw
incredible.
Trump there?
Yeah.
Hilarious.
Yeah, he was an hour late, and the guy next to me who's been to one of his Republican rallies said he'll be an hour late. But yeah, he didn't disappoint. So he was incredible to see. Someone British as well. Robert Kennedy beforehand, I think, offered the world, which he wasn't actually, from the odds, he's just not going to get in.
Yeah.
So I think Trump's speech was underwhelming on that basis, but he said everything we all wanted to hear. But for his age, and he was very articulate, and it was a great, reassuring speech. And again, we were speaking beforehand about what the Democrats are going to do. They're going to be pro-crypto and then just rug us if they win the election.
Mhm.
So I think there's a lot of uncertainty going into the election. Maybe this is why we're seeing some uncertain price action as well.
But can they do that? Can they talk it all up and be like, yeah, we're going to be crypto friendly, get all the votes, and then pull the rug?
Have you met politicians?
Yeah.
Okay, fair enough. Just wondering to what extent they'll do that, right? But
Yeah.
because there'll be a backlash, right? But
Yeah, I think either outcome, there's probably going to be backlash. But no, it was, and I think people that get into crypto don't really want to talk about politics. And I think it was just very astonishing to see that was just the main talking point. Everyone was discussing it. Had interviews with Eric Semler of Semler Scientific, Bill Miller, and it was like the main conversation. That's what everyone's kind of gearing up for and waiting for. So I don't know if that's a good thing or a bad thing, but maybe that's taking some of the
what it's going to be.
tailwinds of it.
It's going to be another crypto buy the rumor, sell the news event. So we're going to get this. Probably going to get a rally into the election, and then when you actually have the election done, that's when we'll sell off into year end. Right?
And I think that's what happened. Trump was speaking, we were floating around 70. And I think Bitcoin's hit 70,000 now 4 times in the last few months. And it just I think the algos just sell it off straight away. But I think I wouldn't be surprised on a sell the news event on that. So we just have to wait and see.
I do. It does feel like the prediction markets and tracking the odds between Kamala versus Trump. She's taken the lead. That seems to be weighing, I think, a bit on Bitcoin. I thought as well. Obviously, you had the Trump conversation with
Musk.
With Musk last night.
That didn't do anything for the price.
No, and it feels like there's been sort of limited headlines at the moment, at least that I've seen, sort of from it. I think there was disappointment. I don't think they discussed crypto at all, from what I understand. So maybe there's a little bit of disappointment as well around that. I'd be interested to see how prediction markets evolve over the next couple of days, because it looks like they're going to have north of 100 million views on that, which you've got to think feeds positively in for Trump, or maybe not. I don't know.
There's quite a high macro correlation at the moment, like all assets, right? So CPI, big data point tomorrow.
Yeah.
Everything's going to kind of move together, I guess, right? So if stocks rally on that, crypto probably rallies on it. If they sell off, crypto probably sells off.
Yeah, and actually the short-term correlation with Bitcoin and the S&P has been like almost just
very high,
just moving together. And then we discussed earlier, just an added complication to everything is some of the geopolitics, some of the potential escalation in the Middle East.
They keep saying it's imminent in the next 48 hours, but they've been saying that for like a week or two.
Yeah. Ukraine kind of upping things, and with the invasion now into Russia.
There was quite a decent bid to gold and oil yesterday. Gold was up 2%, oil was up 3%, vol was bid, calls were bid as well. So there is some hedging going on for the geopolitics, which kind of makes me think it probably isn't going to move markets that much, because people are ready for it, they're expecting it, they're hedged for it. So what do we think about that?
I've always thought that if it kind of enters the mainstream media, that it's all kind of baked in, kind of. But what I was shocked about going back when we sold off, and everyone talks about risk on and risk off assets, that every single thing sold off on August 5th. So my question is, like, what even constitutes risk on, risk off? So if you're a risk off asset, would you not go up instead of everything one-to-one correlated?
Depends why it's happening. If it's a risk liquidation and people just having to degross their books, that's when even gold, which is supposed to be a risk off asset, will sell off, right?
Yeah, which we saw on Monday. And I like to refer to it as position off rather than risk off. It's position off, all positions, all correlations go to 1, and all positions get grossed down. So actually, the trades that actually perform, or the assets that perform, it's not necessarily that they are, performing some kind of safe haven function. It just means that everyone will short that. And again, position off means you reduce your short positions, you reduce your long positions.
Yeah.
So it actually kind of tends to tell you where positioning was.
Yeah.
So last week you saw that
you kind of need a big enough move to trigger that effect. That position off.
Okay.
Where you go from risk off to position off. Right?
Oh, interesting. Okay.
So when everyone stops get hit.
Yeah.
So as long as you stay within people's stops, you've got risk on, risk off, and you've got the normal correlations. But then when you go down enough, then it goes to position off, and you see everything just get liquidated, right?
Yeah, that's interesting.
Yeah.
Yeah, it reminded me, not as badly, but as COVID, where everything just sold off and you're just sitting there, you're like, seems really overblown. Even seeing the VIX, like I've only seen the VIX, over 60, 70, like 3 or 4 times in my life. And I was like, yeah, I should probably buy here. It seems like
there was a really funny chart that Brent Donnelly put out on Twitter. I don't know if you follow him. If you don't, you should. He writes the Friday Speed Run. He's a very seasoned trader, been in the banking world for a long time, FX trader. He put a chart basically saying that, all the spikes in the VIX, and he like labeled them. And you had the great financial crisis, like Lehman's going down. You had COVID, and then you had Bank of Japan hikes by 25 bips. That just cracked me up, to be honest.
Yeah. No, it's
every time you buy an elevated VIX, like it seems to do well. So that was just the methodology that I kind of took from that.
Yeah, I feel as well, like a lot of these vol events, like if you go like in the crypto world, in with the blow up of FTX and things like that, they tend to mark like big turning points in markets. And again, I certainly think for Bitcoin, it probably marks the start of the next sort of run higher. And again, we just got to get through this choppiness, but it's definitely it definitely felt like they'll hike till something breaks. It definitely felt like something kind of broke last week. I think now for the Fed, the risks are clearly much more skewed to the downside. So they'll be a bit more comfortable with the inflation side of things, given how the labour market's evolving, what have you. So they've now got their cover to go and cut. And then the global economy looks really weak, but no one's been able to really, like China particularly, haven't really been able to go and stimulate things because they're all worried about their currency.
Do you think they will now?
Yeah, now that pressure's off, I think they're going to kind of ramp things up. So I think we're about to see a huge amount of liquidity come into the market. I think there's a lot of cash on the sidelines that can come into this market. There's 6 trillion in money market funds.
What does that do to inflation though if the liquidity comes in? Like I know for the UK that the energy deflation is at like minus 16%, and that's only going higher. And they're predicting that the UK inflation is going to start spiking up again. So doesn't that seem?
I think there's a huge dichotomy between the financial economy and the real economy. And this is like my whole I guess long-term bullish thesis on Bitcoin, is that everything's sort of driven around the financial economy. Politicians
financial assets will inflate.
Huh?
You think financial assets will inflate?
Yeah,
real
have to.
Real assets will deflate.
The underlying economy you're saying is like almost dead.
Yeah. I actually think like we're going to head into, again, I talk about the Japanification of the Western world. I think we're just going to head into this really like low growth, low inflation state where, people in the real economy will feel pissed off because
it's the inequality. It's the inequality trade.
Yeah, and anyone who owns assets is just going to be sitting there laughing, which is why I'm like, go buy some Bitcoin. Like
it's the fastest horse in the race.
But I think we're drifting quickly back into that world. And there's been nothing that's happened.
So what took us out of that world? Because we were in that world. We were in that world for ages, right?
Yeah.
What took us out of that world was checks in the post
that went directly into people's pockets.
That went into people's pockets. So they spent money and they pushed prices of everything up, basically.
Yeah.
Right.
Yeah.
So if that's not happening, if the transmission mechanism from easy money isn't ending up in people's bank accounts so they can spend, then you go back to a world where, like you say, you have relatively low inflation, and you have financial assets just soaring.
Yeah. And that's when people say to me, there's someone on Twitter asking yesterday, like, just looking at the size of the Bank of Japan's balance sheet and things like that. Why hasn't it caused like hyperinflation? And I kind of argue that it has, but it's done it in financial assets
Right.
over the years.
That's right.
And in fact, actually, if you look at if you want to look at Bitcoin,
Yeah,
you could say that's
that's
actually
hyperinflated.
yeah.
Yeah.
And if you were and I don't want to get into this argument right now, but if we talked about Bitcoin as being money, which I'm not so sure I'd classify it as that, but if you wanted to price most assets in Bitcoin terms, things have gone down.
Isn't
Yeah,
that
serious
what Michael
inflation.
Saylor always talks
Yeah.
about? Yeah,
So you,
Bitcoin standard.
the hyperinflation, if you like, has been in asset prices,
Yeah.
if not in the actual core sort of basket of goods.
For my generation, for me, the global financial crisis really was the 15 years of 0% interest rates, which just allowed and could hide the inflation in assets and not in consumer price inflation. But now everyone's screaming and crying because it's now showing up in consumer prices and not in the asset prices, which they could hide it in. So I think from a generational divide, well, that's why Bitcoin and crypto for me, but that's the obvious ploy that they found to mask everything.
Yeah. And another thing on the liquidity side, again, the US Treasury still, I mean, the US is running ridiculous deficits, like the largest deficits outside of wartime. And again, a lot of that's being funded through the issuance of bills, which is still drawing down the reverse repo. I think we went below 300 billion earlier this week. So that's bringing like liquidity back into the market, and Yellen is going to ramp that up to try and help Kamala as much as they can. So
It's interesting you say that as well, because that's going to drive markets higher,
Yeah.
right? But then, the little bit of the Trump Elon interview that I caught through like a thread on Twitter, they were talking about the deficit. Elon was talking about deficit and how what the government spending is, and how they should have a task force to basically rein that in and be more efficient in their spending and all this stuff, right? So it'd be interesting to see if you do get some tightening in that, the
yeah,
upside of the
but
election.
the thing is,
You're not going to be able to cut Medicare, Social Security. Those are only going up. So
and also, and this is why I'm actually quite relaxed about markets, whoever gets in, like, because Trump and Kamala, both of them are just going to run massive deficits.
yeah.
Like it's not going to matter. They're both just going to run ridiculous deficits.
Yeah, even that Bitcoin strategic stockpile that they were talking about to try and reduce the debt in however many years or decades. It's fantasy land for us now, and for the next 5-10 years, they're just going to have to continue. But they need unemployment at secular lows in order to get the tax receipts. That's the only thing that I guess they're fighting against.
Yeah.
So you're the on-chain guy. Tell us, is there anything you're seeing on-chain stuff that we should be aware of? What the long-term hodler's been doing, things like that?
It's been quite stagnant since I came in. I think every time it's hit 70,000, we've seen like the smart cohorts, the whales kind of just selling off, distributing. And every time it goes to this lower bound, we've been in this descending channel since the all-time high, and they just kind of pick it up at the bottom again. And
Who
I
the
think,
whales do?
yeah, it's a bit of whales. Even the smaller cohorts that have drifted into smarter money. I think everyone's kind of learned you can kind of see when it's overheated.
Trading the range, basically.
And they're just trading the range. And I think we do need some catalyst to break us out of this range. But I think the halving is actually a short-term bearish event, especially for the miners. And I think we've had that capitulation over. We've also had the sell the news event away from the Ethereum ETF. So I think a lot of those kind of sell the news have gone away. And I think going into a Q4 catalyst, which is historically bullish, and a liquidity driven cycle, that's kind of what we're waiting for.
And because hash rates have started to pick up, right?
Yeah, miners are in kind of a bit of trouble at the moment. The hash price is actually almost like an all-time low because the hash rate keeps surging. This is due to like sovereign nations mining.
So explain this a little bit for people who don't understand like the hash rate and how that impacts the miners and all that stuff.
So essentially you have you have the publicly traded miners or the private miners, and the publicly traded miners obviously have more capital. They've got a bigger burn rate, so they can weather the storm better. The hash rate is essentially just mining Bitcoin in simple terms.
So it
And
tells us how much mining's happening.
yeah, it's just like the computer in energy intensive for the network.
So what happens when the hash rate goes up? What does that mean for the miners? Like what happens?
It doesn't really mean anything. Well, you could say the security is stronger for the network, but it just shows more and more people are plugging, or more investors are plugging into the network. And you can see that we're going into an all-time high. We keep trending higher.
And then does that make it more difficult to mine Bitcoin?
Yeah, because then it has a positive correlation with the difficulty adjustment, which adjusts every 2016 blocks. But what we're seeing with the difficulty, it makes to mine Bitcoin that much harder, but then the hash rate's going up. So we're asking, why is that happening? And it's anyone that has access to low, cheap energy. So that could be nation states that have access to geothermal or hydro, or just big companies that have a huge burn rate. And I think it came out that Russia have started to legally mine Bitcoin. So you got all of these kind of catalysts. And that's kind of what we saw after the halving, that all these smaller miners couldn't really keep up with the network and have to turn off essentially, which is why we saw a hash rate correction.
So when they turn off,
it basically consolidates the market for the bigger players,
and this reduces difficulty,
and therefore it's cheaper for the bigger players to mine it.
It's all relative. Well, they'll come in, consolidate the market. And then, you just go into, we then do have a problem of mining pools essentially having too much consolidation. And I think CleanSpark have just come out, one of the publicly traded miners who mine in Foundry's mining pool, and they're going to have hopefully their own separate pool, which decentralizes the mining network. So that's only the small issue going forward. But yes, it's always positive to see the hash rate going up, meaning more people entering the network.
From your view, James, are we still kind of tracing out a very typical post-halving cycle? Is there anything that looks different to you, or is this pretty much status quo for any halving cycle?
This is now, I think, the worst performing cycle since the halving. We're actually down. I think we started the halving around 63,000. So that's never happened before, but we've also never hit an all-time high before the halving.
But that changes week on week though, right? We were at 70k like not long ago.
Yeah, well, I'm just saying as it is now. So it's minuscule. But no, I think we're still pretty much on track compared to most epochs previously. It's looking, I'm still encouraged, and I still think 80,000 is possible at end of year as a lower bound range.
So Imran, the question for you, I guess, is we've all been whipsawed in the last week or so,
including me.
What's looking good now, and how are you positioning?
So I'll give you a quick rundown on what I saw on Vol this week. So the super front end, like the weeklies, are quite big. So Vol got offered into last week after the bounce. In general, the whole curve came down. Since then, this Friday options are better bid coming out of the weekend because we've got potential Iran attack that people are worried about and hedging against, like buying a few puts to protect against that, and the fact that spot has bounced quite a lot. But beyond that, in that kind of 1 to 2 month bucket, we're seeing Vol better offered. So people willing to sell calls, thinking that we're probably not going to break the top of the range in the next month or two. So anything sort of August, September is still fairly well offered. But when you look to November, and Deribit have introduced the November expiry for the election, so people can start actually positioning for that if they've got a view. November buckets onwards are quite well bid in Bitcoin, right? So you're seeing the calendar starting to steepen in that middle part of the curve where September or earlier is offered, maybe even October a little bit, and then November, December, March are all quite well bid. So I think that's quite a good trade. I think that's got more room to continue to steepen. I think if you're bullish for the election, and that's the main catalyst that you think is going to get everyone into crypto again, and particularly Bitcoin is going to drive the strength, I think owning something in like November or December and funding it with September calls as like a call calendar type structure, I think that works quite nicely.
So sell September,
by November or December. Yeah, exactly. So have that call calendar on. That'll cheapen the cost of just buying the outright calls that you would do in November or December, and it will help fund that time decay. And even if we do rally, as long as we don't breach your September strike, which you probably need to put at 80K or above, then you'll be relaxed, basically. Because I think it's going to be difficult to break that early, right? And Q4 does tend to be the strong quarter. And then the other stuff, Ethereum wasn't really seeing that dichotomy in the calendar. That wasn't seeing that steepening. So the whole curve was softening by a couple of points. But Ethereum vol does trade pretty elevated, right? So it's sitting about 15 vols over in the front end, over Bitcoin vol. It's sitting about 10 vols in the back end. And the call skew in the back end, whilst it has got a steeper put skew in the front, so it's like people are a bit more nervous about Ethereum in the short end. So the puts trade at a higher premium than Bitcoin puts in the front end. But then in the back end, the calls trade at a higher premium than Bitcoin calls, which is people being a lot more bullish Ethereum longer term, not really knowing when the kind of alt season's going to kick in, and not thinking that it happens maybe this year, but next year people are like bidding up for Ethereum upside. So I actually quite like fading that right now, because I think between now and year end, Bitcoin dominance continues, as James suggested. And you can probably own like the December 80K calls. I mean, I haven't priced it myself because I literally was thinking about this trade on my way into the studio. But you probably own the December 80K calls. And then for the premium that you're spending on those, you could sell Ethereum either December or even longer dated calls way out of the money. And because of that vol and skew differential, I think that the setup on that will look quite nice. Like the break evens on that trade will look quite nice, especially if you think in the next few months, Bitcoin's the one that outperforms.
Interesting.
Yeah.
Yeah, interesting.
Cool. All right, well, James. Well, I think we'll call it a day. It's been a pleasure to have you back in the studio.
Thank you for having me, guys.
Yeah, and hopefully you guys enjoyed that episode. Remember to like and subscribe to get this stuff viewed by more people, and we'll catch you all back here next week. Cheers.